Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SHERWIN Williams Co. quarterly report. The Sherwin Williams Company offers a diverse range of businesses and services across three segments: Paint Stores Group, Consumer Brands Group, and Performance Coatings Group. Key offerings include architectural paint and coatings, protective and marine products, OEM product, finishes, branded and private label architectural paints, industrial products, wood finishes products, wood preservatives, corrosion inhibitors, aerosols, caulks, adhesives, automotive refinish products, coil coatings, packaging coatings, performance-based resins, and colorants. These services are provided to various customers, including professional contractors, industrial clients, retailers, home centers, hardware stores, dealers, distributors, and jobbers. The Sherwin Williams Co. (SHW) stock price has shown relative stability over the past year, experiencing declines in the range of -6.12% to -7.48%. This performance can be attributed to a balancing act of positive developments and ongoing macroeconomic challenges. The company's quarterly earnings have been mixed, with strong results in Q4 2024 and Q1 2025, but lower profits in Q2 2025 due to weak demand. Strategic acquisitions, such as the Souvenir acquisition, are expected to contribute positively to future financial performance. Additionally, the company has demonstrated financial stability by increasing its quarterly dividend for the 46th consecutive year. However, industry headwinds, including soft demand and high mortgage rates, have impacted sales. The stock's resilience can be attributed to strong operational execution and strategic growth initiatives. Analyst sentiment remains a moderate buy, with average price targets suggesting potential upside. Overall, the Sherwin Williams Co. stock price has remained within a relatively contained range due to a series of incremental positive and negative news items. The primary drivers of revenue growth or decline for the company can be summarized into two main categories: revenue growth drivers and revenue decline drivers. Revenue growth drivers are primarily driven by an increase in net sales from Paint Stores Group, the acquisition of Souvenir with annual sales of approximately $525 million, new stores and digital technologies, selling price increases and sales volume growth in Paint Stores Group, and incremental sales from acquisitions in Performance Coatings Group. These factors have contributed to a significant boost in revenue. On the other hand, revenue decline drivers are mainly attributed to soft DIY demand in North America and Latin America for Consumer Brands Group, unfavorable business sales mix in Performance Coatings Group, lower net sales, supply chain inefficiencies, and unfavorable foreign currency-related impact in Consumer Brands Group. These factors have led to a decline in revenue. Overall, the company's revenue growth or decline is largely influenced by these key drivers, which are critical to understanding the company's financial performance. Net income and profit margins overview. The company's net income experienced mixed results in Q3 2025 compared to the same period in 2024. While it increased by 3.3% to $833.1 million, year-to-date, YTD, net income declined from $2,201.3 billion to $2,091.7 billion. Profit margins remained relatively stable, with a gross profit margin of 49.2% in Q3 2025 compared to 49.1% in the same period last year. The reasons behind these changes are unclear, as no specific explanations were provided in the financial report. The discrepancy between pages regarding net income growth further complicates understanding the company's financial performance. The company is indeed generating positive operating cash flow. This is evident from the significant increase in net operating cash, which rose to $2.359 billion in 2025 compared to $2.218 billion in 2024. This upward trend indicates a substantial improvement in the company's ability to generate cash from its core operations, suggesting a strong financial position and potential for future growth. The company's financial health has undergone significant changes over the past year, particularly with regards to its debt level and interest expenses. The total debt outstanding at September 30, 2025, stands at a substantial $11.515 billion, representing a notable increase from previous years. This is further exacerbated by the long-term debt of $9.668 billion. Concurrently, the company's interest expenses have also seen a considerable rise, increasing by 13.4% to $117.2 million in 2025 compared to $103.4 million in 2024. This increase in interest expenses suggests that the company is shouldering a heavier burden of debt repayment, which may impact its financial flexibility and profitability. The company's financial performance varied across different segments and regions in the recent period. The Paint Stores Group and consolidated foreign subsidiaries showed strong growth, with increases of 5.1%, 3.2%, and 3.3% respectively. This was driven by higher net sales in Europe, particularly among professional customers. In contrast, the Consumer Brands Group underperformed, experiencing a decline of -2.6% due to soft DIY demand in North America and Latin America. The Performance Coatings Group also saw some weakness, with decreases of -1.1% across most business units except packaging, which continued to grow with double-digit percentage increases. The Latin America region within foreign subsidiaries was another bright spot for the Paint Stores Group, while the Europe region contributed to growth in both the Paint Stores and consolidated foreign subsidiary segments. Management is confident about the company's outlook, citing its continued execution of the Success by Design strategy. This approach focuses on delivering differentiated solutions that enhance customer productivity and profitability. The company remains well-positioned in targeted markets and is investing in initiatives such as digital technologies and new store openings. In terms of capital deployment, management has adopted a disciplined approach, balancing investments to drive value for customers with returns to shareholders. For 2025, the company expects to allocate slightly less than 2024's capital expenditures, primarily funded through operating cash generation. These funds will be directed towards capacity improvements, productivity enhancements, and maintenance projects at existing facilities and new store openings. The company's financial performance was influenced by several acquisitions and divestitures in the Paint Stores Group, Consumer Brands Group, and Performance Coatings Group. Acquisitions had a minimal impact on the company's finances, with only the Performance Coatings Group experiencing a 1.3% increase due to incremental sales from acquired businesses. In contrast, divestitures resulted in a loss of revenue for the company. The Paint Stores Group saw a 0.3% decline, while the Performance Coatings Group experienced a 1.4% decrease. Overall, the total impact of divestitures was a 0.6% reduction in revenue. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company has paid out significant dividends, with amounts totaling $594 million in 2025 and $543.6 million in 2024. Additionally, the company has also engaged in share buyback programs, repurchasing 4.45 million shares in 2025 and 4.35 million shares in 2024, demonstrating a commitment to returning value to its shareholders. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights a pressing concern regarding inventory buildup. Specifically, there is an alarming increase in inventory worth $8.9 million, as mentioned on page 43. This significant accumulation raises questions about the potential for supply chain disruptions and inefficiencies in the company's operations. The issue warrants further investigation to prevent any future complications that may impact the business's overall performance. That concludes the financial summary for SHERWIN Williams Co. Feel free to comment below, and I will be happy to answer them when possible.